Welcome back to the Bitcoin Daily Podcast, your daily source for the latest developments in the world of Bitcoin. I'm Mayo, and today we've got some important news to discuss regarding Bitcoin's technical indicators. If you've been keeping a close eye on Bitcoin's price charts, you may have noticed a pretty significant event known as the bearish death cross. What the hell is this? Well, it's when the 50-day moving average crosses below the 200-day moving average. So it's pretty critical in technical analysis because it often raises concerns among a lot of traders and investors. If you have a look at our Bitcoin chart here, this cross signifies that the shorter term price trends are now crossing below the longer term trends, and it can be seen as a signal of a potential shift in market sentiment towards a bearish direction. So you can see here in our chart, ever since literally January the 1st, to be honest, we've been in a pretty nice uptrend, going all the way from 16,000 all the way up to where we are now in the 26,000s. So it's been a nice uptrend in the longer term, but recently, now that you can see that this lighter blue line is crossing below the darker blue line, it's a sign that in the short term we may now be reversing this trend. But what's crucial to understand is that the bearish death cross is a lagging indicator, and it doesn't guarantee immediate price drops. It suggests that bearish pressure may persist in the near future, but other factors such as market sentiment, external events, all of these things can also influence Bitcoin's price. In the past, we've seen instances where Bitcoin has experienced a death cross followed by a further price decline. However, it's essential to remain cautious and consider all the other factors when making any trading decisions, as always. For example, if we look at the opposite idea, which is a bullish cross over here back in February 7th, you can see their 50 daily moving average crossed above the 200-day moving average, and to be honest, after that Bitcoin actually dropped. It dropped from roughly 23,000 down to 21,500, and after that it dropped even more, all the way down to below 20k. So in the short term, things can go the other way, just like it has done really ever since this bearish death cross occurred. We've actually price has gone up pretty nicely from around, let's say, what should we call that, about low 25,000s to almost, it went well above 27k today. So it's not a immediate indicator, it is a lagging indicator, so we'll see what will happen in the coming days and weeks ahead. So what this means is, if this bearish death cross does play out, then it could give us a nice little buying opportunity. Prices may retrace to recent supports, around just below 26k, or even further down at around 23, 23.2, 23.5k. That would be what I'm looking for. I'd love to buy Bitcoin under 25k, under 24k, in that kind of region. But yeah, that's it for today's Bitcoin Daily Podcast. We've discussed that the significant event of the bearish death cross, where the 50-day moving average crossed below the 200-day moving average on Bitcoin's price chart. Don't forget to like, share and subscribe to stay informed about the latest developments in the world of Bitcoin. Stay vigilant, stay informed, and join us again for tomorrow's episode. Thanks for tuning in.